Welcome to Momentum Monday. Today's Sunday, January 26th. Happy Chinese New Year.
Happy flu virus. So you got some gray hair? You're trying to cover it up, Ivan?
I don't know what you're talking about.
What do you mean?
Anything gray hair? I don't see anything.
You're not old until you get a gray nose hair that's about 4 feet long. Where you pull it and it just keeps coming from and then it comes from the top of your head connected.
Okay.
But you're fine. How old are you? 38?
Yeah.
All right. I did not follow the markets that closely this week. So I'm going to let you tell me what's going on here.
All right.
You're in San Diego. I'm in Phoenix. And we're going to use MarketSmith's charts. Thanks, MarketSmith, as always. All right. So I have been doing a lot of catch-up reading here, Ivan, and it looks like a lot of the technicians have said, listen, we've had a good run and there's some signs that we may be exhausted here. And some of the technicians that have had a hot hand on this trend run are worth listening to. So what do you see?
Yeah, I mean, definitely there's some signs that there is a change of character in the market. Obviously, still in an uptrend, still all the major moving averages are above their rising 50 and 20-day. But we've been in such a steady uptrend for the past 3 months that even a 1% one-day sell-off seems like something significant. And last week we talked about the typical pattern during earnings season, how most of the easy gains usually happen before the earnings season or immediately after the bulk of the earnings season. And during the earnings season itself, we see a lot more choppiness and volatility, and this is exactly what we're seeing right now. Obviously, that fear-mongering related to the virus from China is definitely affecting many people and algos. So I think that was definitely a reason on Friday for the market to...
yeah, and there was some good volume. I mean, stuff was going straight up. Tesla, I look at Google's chart and I'm like, yeah, it went sideways for, 3 years. So it was a great breakout, but I mean, it was gapping up $20 a day.
Well, that's a typical short squeeze when a stock has such a high percentage of their float shorted and it breaks out to new all-time high. In a bull market, it's a typical short squeeze. And it's not only Tesla, we saw something similar in other stocks.
I was mentioning Google too, which isn't so much probably a short squeeze, but the stock's a mature.
Well, Google, Apple, both of them have been on a epic run lately, especially considering their market cap.
Apple has earnings this week. I wonder if
there's so many that are having earnings this week. Amazon as well. We talked about Amazon last week. It's probably the only one out of the big four that hasn't had a big run and it's not near its all-time highs. But that's because here between 2015 and 2017, it had a giant run, and now it's consolidating through time.
Can you imagine that? $4 in 2001, $5.
Yeah, insane.
Incredible. So many lessons from looking back at history. So many lessons, especially on winners and having some perspective of time. All right, what else you got? I tell you what, I was looking at Verizon. These utilities, because rates are dropping, utilities.
Definitely, the defensive stocks, utilities, REITs, the high dividend stocks have been.
You can make 4% and earn 10% a year on the stock. I mean, that's just been. Verizon's paying 4% divvy. And if we look back, go back to a monthly on Verizon. Oh, that's the XLU. Sorry. Okay, sorry.
Yeah, Verizon has been consolidating through time for the past few months, and is setting up for a potential breakout. This is a very big level here near 62.
Yeah, I'm just thinking, as much as I hate these companies, I tell you what, I get my Verizon bill every month. I never really interact with them anymore. For about 2 years, as much as I hate them, I don't talk to them, and I pay my bill, and it creeps up. They're paying a 4% divvy. And in a low interest rate world, I can understand why people are hiding out and stuff. I don't know. It feels bulletproof as much as I hate them. All right. So you were talking. So go back to utilities. Sorry.
Yeah, I mentioned that with the U.S. Treasuries rallying and therefore interest rates going down, definitely we're seeing some inflows into high dividend stocks like utilities, like telecoms, like REITs. look at that huge run in utilities in the past 10 days. And basically utilities look like home builders since the beginning of the year. Very interesting, and two industries that couldn't be, more far from each other. One is about growth, the other one is about defense and yield.
Yeah.
So definitely we're seeing some defensive moves in the market. Treasuries perking up and kind of setting up on multiple timeframes. Gold and gold miners also setting up. Look at gold,
Wow.
and looking bullish. I think there will be decent hedging instruments if the market pulls back.
I mean, you've got deficit, you have warmongering, you have out of control government. Even though Republicans would say it's less government, it still feels pretty out of control in the sense that if you look at the last little bit, no one seems to care about the law right now. So interesting that gold is truly perking through all this. Doesn't interest me, but it's worth noticing.
Well, it might be good for a trade, of course. No one is talking about anything longer term.
And then anything showing up in your trends, Ivan? I mean,
in this related to stocks, the only thing that's currently interesting to me are some of the software names.
Okay.
Just because they're showing notable relative strength as of late, especially on Friday when the whole market was down 1% or more. We saw, for example, Team, which is Atlassian.
Jira. I mean, everybody uses it in the tech world.
Big earnings gap. They beat estimates. They guided higher.
I mean, you're paying 100 times earnings. I mean, it's just what that makes this so hard. You got a leading company and a dominant product.
But they also continue to grow at
30%. Even if you're growing at 50%, it's trading at 100 times earnings.
That's nothing. It's nothing for a high growth momentum stock. If the market,
this isn't a 2-year-old company. This is a mature company. So yeah, I mean, it's growing. And it's an amazing company. $36 billion market cap. Wow.
The market doesn't
want. I remember riding this for a while, and they made a great move. They got rid of their hip chat product. They got it. They focused. It's a good lesson in focus. They were in the Slack world, and they had this Jira software development, platform, and pretty interesting as an Australian company. There's a lot of good tech companies in Australia. Okay, next. So yeah, software. Anything else showing up?
Significant growth in that company. But anything related to software, it's actually looking good. MDB setting up here near 150 for a potential breakout. Okta, which is a cybersecurity name, also is kind of building a new base.
Yep.
Twilio also, even though it's right
near. But firming up at that 120 area. Yeah, I mean, it looked like hell 3 months ago, and I was sticking with it. So I'm glad I stuck with that.
In terms of stocks, this is the only sector that currently interests me. Software, and other than that, I think it'll be all about defense next week, about treasuries and gold miners, maybe for the next few weeks.
And the headlines with the flu. And
we're in the middle of earnings season
right now. There's a lot of noise, and there's some truth to some of the noise. And stocks have had a great run. So I was talking last week about feeding the ducks. About don't go broke taking a profit, and that hasn't been necessarily the best idea the last 2 or 3 months, is selling into this strength. But stocks can fall pretty quickly when they're extended like this. So.
Well, the biggest mistake people make during a strong bull market is selling too early, but the biggest mistake people make during choppy market is just selling too late, right?
Yeah.
The market constantly changes, the environment constantly changes, and you need to kind of adapt if you're really active.
Yeah. So utilities driven probably by interest rates, gold driven by many things here. And home builders. So interest rates.
I would assume that some of the virus-related company will continue to be held at least for the
No, on
next
stock twits, you just see this guy. I mean,
couple of weeks
listen, it
or so.
works. If you can catch these things and not be greedy, you can catch some points on these.
Yeah, what was the other one? This one is a San Diego based. It's also kind of working up.
But at the same time, biotech, some of the biotechs got hammered. Amgen got hammered.
Oh, absolutely. The biotech sector. So first of all, the biotech sector was basically among the first ones to rally back in October. And I remember that vividly because we talked about it. We talked about that potential breakout and on Momentum Monday.
No, that's a real risk-off signal right there.
And now it's back to a very important level. I mean, look at this level, 89.90. Let's take a look on the weekly.
No, that's a 10% pullback. I saw Amgen, which I own, just get hammered.
This is an important level. If this level doesn't hold, I think that would not be a good
I think the China stock sold off too, obviously on the flu and just on maybe some risk off.
Absolutely, yeah.
Pretty big pullback in some of the Chinese stocks quickly. So I think that's what people got to remember. You know, you look at China, you look at Amgen, you look at some of these stocks that were ripping, and like 2 days later, you can be back into a base. So you can't.
That's what's interesting about that pullback in China. It actually affected every single Chinese stock. I mean, obviously, anything.
Well, affected Disney closed their park. Look at Disney.
Anything related to leisure travel was hit hard, including crude oil. But then also every single Chinese company, including the internet companies. And you would think if the Chinese are spending more time at home, they'll be spending more time on the internet. And
no, there'll be opportunities. But I mean, I think the virus is real. I mean, it's interesting. Netflix has a documentary right now called Pandemic. So and they had been filming that for years or a couple of years, although it's not that well done. So I'm saying it's kind of interesting that pandemic documentary on Netflix is out as we get this scare out of China. I mean, 60 people are dead or something, so it's not just a scare. But
they're really good marketers. They know what people want to watch right now.
People are tired. They're terrible eaters is what they are. They're eating bats and crazy shit, and that's what spreads virus, all these animals. Okay, buddy. So risk could be coming off if you look at biotech, if you look at utilities, some of these defensive names. But at the same time, tech is extended. But there is some strength. I look at NDAQ, the Nasdaq. It's the Nasdaq, which has kind of tracked the QQQ, but isn't the Nasdaq. All-time highs right here, and I think it's undervalued, like relative to the market. Not growing like crazy, but at the same time, it's less market cap than Twitter, and it's the fucking Nasdaq, and they're doing billions. I don't know, $5 billion in sales, profitable. So I think with Plaid and Visa, I don't think there's any supersized risk in this market other than, a page 10 thing like the virus. But when you see Disney get hammered on the China news, it's real.
Well, of course, they closed their biggest park for New Year's there. So yeah, of course it's real. And
is
real.
Question is a 10% pullback pricing these things, and that's a pretty big pullback over the last month. So, but as you see, just like the biotechs, Disney's pulling back into a long-term base. It looked great a month ago. So, all right, everybody, I think that's enough. I think there'll be a big earnings week. I don't like to follow the markets too closely during.
Big earnings week for sure, and implied volatility is kind of low. So for whatever reason, expectations are not too high, which could be great news for.
Well, you see it in Atlassian when people aren't expecting great things and the volatility are low, you can get explosions.
Yeah.
No, I was talking about Atlassian, not Atlassian.
Oh, Atlassian, yeah, absolutely. Yeah, I mean, big breakouts, big earnings breakouts, and I think if the market is weak for the next couple of weeks, this stock will kind of consolidate through time before it tries to break out again. 150 is a huge level. If it clears 150, considering big short interest, I think it can go 15, 20 points higher. And so real quick, just to remind people that I have a new premium service which involves a private Twitter feed and also emails for those who don't have the time to follow Twitter. And I do share options ideas, stock ideas. And if you go to my website, ivanhoff.com, you can just scroll down on the premium and just click on performance. You can see every single close trade I took. And
a good swing market. You've done well.
So far, yeah, we've done really well, and including last week, we had some great trades in DDOG, INMD, and so forth.
Yeah, INMD, I saw a lot of swing traders in that.
Yeah,
that was a great one. Okay, good job. Have a great week.
all right, you too, Howard.
Okay, everybody.